Hello, welcome. Today is March 10th. Big day for the Ninja Turtles, actually. Got announced a brand new game. TMNT Shredder's Revenge. Really looking forward to that one. You should really check out the trailer for it. It's in the old school style from the 1980s. Looks like it's going to be a really great game. I mean, if you look at the trailer, you definitely can tell that they made it for us old people. Well, anyways, I didn't really want to talk too much about the Ninja Turtles because I'm going to be playing it. Really wanted to talk more about today's news. I wanted to start off with a story that was actually from yesterday. It was from the street because it really talks about a lot of the big trends that have been happening lately. And a couple of the big trends that have been happening lately is bond prices. So apparently bond prices, it's been a real bull market for bonds, for treasury bills specifically. It's been like a 40-year bull market apparently. And bond prices yesterday, they kind of took they've been a little bit volatile. So when the bond prices went down a little bit, it fueled buys in tech stocks. And then when the bond yields went up a little bit, it fueled kind of a buy more towards value stocks. And a great article that the Street had yesterday was kind of the effects that we've seen with this. We saw tech not really take a dive, but just lose a little bit. And they really saw that as a sign to buy some of these growth tech stocks. Even some of the ones that could really be considered more like values stocks, but still definitely a lot of growth potential, like an Apple. There was specifically an article yesterday from the Street, 2 more reasons to buy Apple stock on the dip. And they mentioned that Apple equity nearly dipped to $2 trillion. And for it to dip to $2 trillion, it would hit a low of about 118.79. But it closed above that. So they're pretty much saying, hey, Apple, it's been losing a little bit. Historically, if you buy on a dip that was consecutive for 3 periods, and by 3 periods, I mean a loss of 3% too within that 3 period. If you buy after that 3-period consecutive dip, investors typically saw within the next 3 months, they saw a gain of about 6.7%. So that's kind of what they're seeing right now with Apple. And also, with what I mentioned about the 10-year yield for the Treasury bills, that's also speculating to drive, like I said, beyond it driving away buyers from tech, which it isn't doing that much. It is driving buyers to go more towards the value-based stocks. So yesterday there was another article by Kathy Woods. Don't want to mention her too much because she gets brought up literally every day just about. I'm surprised I didn't see an article about her today. But yeah, that's something that she brought up as well, how there has been the 40-year bull market with bonds, and how the bond yields right now have been affecting her investments as far as, the move away from tech stocks over the value stocks. But very quickly we see that tech kind of is rallying again. So that was kind of what I wanted to start as background from yesterday's news. Now the first actual story I wanted to go over today is from CNBC. Guess what, everybody? Congress finally passed the $1.9 trillion COVID relief bill, which you may know better as the $1,400 stimulus checks. And it is expected that Biden will sign this into law as early as Friday. However, there's a lot of caveats to this round of stimulus. Way less people qualify. Well, maybe not way less, but if you're one of those people, you're going to feel like it's way less. But this time, let's see, and I'm only really going to go over single qualifications. It's a little bit different if you're married. It's kind of doubles the qualification, but it's not that simplified. But right, if you're single or married, it's going to go off of your 2020 return or your 2019 return if you haven't filed your 2020 return yet. So right, single. Let's see, what is it again? If you're making less than $75,000, you will get the full amount. If you're making more than $80,000, you're capped out. You won't get anything. So this one caps out pretty quickly. I believe like the prior ones have capped out, or prior ones, more like the last one. I guess there was two, the $600 ones and the one that we got during the, well, they were both during the Trump presidency, but the other one, the one that was like for $1,400 as well, the one from earlier last year. I believe that the limits on those, the income limits on those were like 100,000. And that's when it capped out completely. I mean, if you made over 75 or whatever, it would start to fall off. But that's quite a difference, man. And there was some other articles yesterday about, like what one could do to kind of help with their tax planning. And they talked about like putting money into an IRA, putting money into a health savings account, which, is great. But really for that to work out, you have to already have several $1,000s lying around to put into your IRA or HSA. And typically if somebody already has that type of money lying around, they will have already invested it or like spent it. So they're not going to have that money. So just wasn't too like thrilled by that article yesterday. So continuing, I had another article that I wanted to discuss about. It's from Bloomberg. It's the stimulus checks bring hope for bull market roiled by bond yields. So according to a Deutsche Bank survey where they surveyed retail investors, they expect that about $150 billion could flow into stocks, all due to this stimulus. So, definitely a good time to be buying. You can expect to see some rallies just that's what that news sounds like, and I really don't have any reason to kind of like think against it. Not that I'm an expert or anything like that. I'm not a financial planner. You shouldn't be taking my financial advice. I'm just some guy that's playing Ninja Turtles the Hyperstone right now. And I happen to like keep up with news, and I guess I would consider myself an informed investor and technically savvy in those aspects. But like I said, I'm just some guy playing Ninja Turtles the Hyperstone right now. But yeah, the sheer size of the overall stimulus package has raised concerns, though, about the overheating economy, and this has resulted in treasury having trouble with that one. Treasury yields, they're going skywards and at a furious pace. It's accelerated a rotation of high-priced technology stocks into cheaper cyclical shares. That's kind of like what I was saying earlier, that call them high price, whatever. It's just saying that the high tech stock, the growth tech stocks, investors are moving away from them a little bit to go more towards the value-based stocks. And they talk about cyclical, and that really goes more to talk about how, hopefully the pandemic and these lockdowns are ending very, very soon. So a lot of these businesses that are, about going outside or leaving the house, they may rally. So definitely ones to consider there. So next article I wanted to talk about is from Morningstar. So Morningstar writes that the Biden administration will improve regulatory climate for sustainable investing, otherwise known as ESG. So if you're not familiar with ESG is kind of this whole basis of, obviously there's investment done on the economic environment of a company, like how well it does financially, that it's, that it's got growth, that it has earnings, that type of deal. But ESG goes beyond the economics. It goes into factors such as sustainability, and if you're not familiar with sustainability, that's really more like about the environment and about how a company uses its resources, how it uses natural resources, just really how a company is or is not a steward to in the environment, what type of impact do they have on the environment. And of course then there's the G, which the G is for corporate governance. And if you're not familiar with corporate governance is the idea of how is this company managed. And it's really more about how is it managed at the top with its corporate officials. A big complaint, I don't want to call it a complaint, but a big trend that happened in the 80s was, and I don't know if it was entirely because of stock buybacks, but a lot of it was because of stock buybacks. But in the United States, sometime in the 80s, CEO compensations for public companies started being tied to stock performance. So really, ever since that, there's just been kind of kind of this doubt on whether is that really the best corporate government structure? Is that really what's best for the company, or at the end of the day, is that what is best for a single person? Is that single person going to then make risky moves? Are they going to put the company in terribly leveraged positions? Are they going to borrow way too much money just so that the stock price goes up in the short run? And then, it's like the origin of the pump and dump, really. It's like pump and dump at the corporate level. It is literally what it is. So yeah, that's kind of like the concern with corporate government structures, and ESG with corporate governance. They go into a lot of other stuff too, as far as like, more as far as like the makeup of the corporate officials, and that, in my opinion, that starts to get a little bit political, so I won't really go into it. But in a nutshell, that's what ESG is: investing not only on the economic factors of a company, but investing on its sustainability and corporate governance. Well, anyways, that was a long introduction on ESG. So what the heck does that actually have to do with anything and what the Biden administration did? Well, back when Trump was president, I'm not going to say that he wasn't a fan of ESG, but he kind of like made it more difficult for, funds or whatever investment institution that manages things like like a 401k. He made it difficult for those funds to really invest more in ESG type funds. And in my opinion, I don't think that was necessarily a good thing. He could say, well, these type of funds, they need to focus on profitability. Well, yeah, of course they do. But if people want to invest in these other things, if they want to put their money where their mouth is when it comes to the environment or society, they should be allowed to do that. And by really restricting these type of investments, specifically for 401ks, you are limiting not the retail investor, but the everyday investor, the everyday person that doesn't invest in stocks and bonds or whatever type of financial instrument, but does have a 401k, be it from their individual employer, or maybe they just have an IRA or something. So at the end of the day, I think this is a good thing. My personal feelings on ESG, I was really, really, really into ESG like 10 years ago. I had just moved over to Central California. I was getting a master's in business, specifically studying sustainability and investing. And I was a believer. I was such a believer. I thought carbon markets were like the greatest thing ever. And man, just like 10 years later, I'm not really a believer anymore. I don't want to say that I'm not a believer. It's just that I'm a lot more cynical about it. If I could go back in time 10 years, I wish I would have been this psyched up about like investing in cryptocurrencies and carbon markets or ESG, but whatever. Yeah, I'm not gonna like completely forget about it. Maybe one day it is gonna be like the go-to investment. It's gonna be like awesome, but today, like in 2021, I'm like, man, that really, I'm sorry, but I really do feel like it was a waste being so hyped up about ESG for so many years. So, whatever. Like I said, I'm just like, I'm not hyped up on ESG anymore, but I'm not going to badmouth it either. So that's enough of that. So, next story we have is from Market Watch. So what's Market Watch got? What else they got to say? Market Watch. They have to say, oh yeah. So in case you didn't realize, there's a stock of this retail gaming store called GameStop. It's kind of funny. Like over the years, people have complained about this company like a lot. But yeah, they had like another. Of course, you know about GameStop. Anybody that's investing right now knows about GameStop, and a lot of people got driven and interested in investing right now because of what happened at GameStop. But basically, GameStop, they've had another major rally over the past few days. Today, they hit a high of nearly $350 at $347.51. However, volatility is the name of the game. or a lot of people sold and just didn't want to hold something because it did tank afterwards and dropped down to 265, which is still like a major gain from where it was like a week ago. So a big thing that people are speculating as far as why the price went up. So as an aside, fighting beat 'em up games, playing a single player, hate it when you like have to continue and you have to go back to the beginning of the level. What's up with that? Start me where I died. Spawn me where I died. Oh yeah, like I was saying, yeah, GameStop closed at 265. Still major gains though from where it was a week ago. And some speculation as I was trying to get at as far as like why there has been this big rally. You know, obviously there's the speculation of groups on Reddit buying, which, be careful with those groups on Reddit, because like I'm sure plenty of people bought at that high of 365 or 347 or whatever, and now lost like a ton of money. So be careful with like Reddit investing. Yeah, for sure. So anything else that I want to say about GameStop there? No, not really, but there was kind of like another similar story from Bloomberg that kind of touched on it, that they said, the speculation is that a lot of these shorts had to be covered by these institutional investors, these hedge funds. So these hedge funds that were not voting, but they were betting against GameStop. They were leveraged. They had borrowed these stocks in hopes that the price would go down. Well, Bloomberg speculating that a big reason for the rally is they had to cover their bets. They had to cover their shorts. So yeah, that could definitely be a reason. I could definitely see that why the price would have rallied. And if you kind of go look into some other news sources, they start to go into again that trading was halted again, and man, just another reason you really got to be careful with these Reddit stocks, because man, you just don't know how the market's going to react to them and who's going to change the game on you. Yep. So kind of another one I want to talk about that was CNBC. Just a little short article. Short seller Carson Block defends the practice. It says trying to expose fraud is pretty American. So, obviously this guy's an investor. He's a short seller, and he announced one example. He announced maybe about a couple of weeks ago or a week ago. He made a big announcement. He feels that this one company. So I'm going to pause it right now. XL Fleet. He's accusing them of exaggerating their sales pipeline to justify future revenue projections. So basically, this guy, he calls out these companies in public, and he's saying like, oh, these companies are bad, short them. And he's got like this huge financial incentive for these things to come into fruition. Now, I feel like I do have a kind of a strong opinion on this one. It is not the place for investors to do so. I mean, obviously they should like bring up fraud, but it's not their place to control fraud. That's something that a financial auditor does. In case you didn't know, these publicly traded companies spend a ton of money every year, hundreds of thousands, if not millions of dollars every year, so that a public accounting company. And a lot of these larger stocks, I mean, they only work with one of 4 public accounting companies, and they're not cheap to work with. And these public accounting companies have an army of auditors. And guess what? It is the job of these auditors to detect material fraud and errors, not the job of short investors. So I just really don't agree with this guy, because, I mean, auditors, they don't have a financial incentive to tell everybody, don't buy this stock, or I have an adverse opinion or a disclaimer of opinion on this stock. No, they just have an incentive to do their job. And someone like a short seller here, he's absolutely incentivized for what he says to come into fruition. So I don't feel that, I don't agree with this guy saying that short selling, it will detect fraud. But when you have such a financial incentive for something to come into fruition like that, he's just kind of full of crap. So that's kind of what I wanted to say there about that article about short selling. So, sorry, I'm going to pause again. Another article I wanted to talk about is another one from the street. So talking more about like the shorts and the meme stock. So the street, they had an article, how to trade AMC Entertainment after it's reporting earnings. Well, my personal opinion, how to trade AMC, don't, don't. Like, it's still a very volatile stock. There's still like way too many people maybe possibly trying to pump and dump it, and a lot of like news that's just trying to make things come into fruition. They're trying to like manifestation news of the markets for the markets, I'll call it. And kind of the big reason I feel about this is if you read some other articles, they talk about this big AMC rally, this big AMC rally, and I want to know what big AMC rally are they talking about? What did AMC close at today? Sorry, I'm gonna pause this real quick. They closed at 985. Oh, 985. Let's put that in a little bit perspective. So the shares went from a high of, and this is really just this year, and within the past couple of months, the shares went from a high of $20, stabilized to like $7. There's been highs up to 17, and ultimately the stock has settled at an average price of around like $5.50 to $6. And there's been some push-ups, there's been some pumps, but nothing that big. Like in my opinion, going from like an average of $6 to 11 and change for like a day or two, that ain't there's nothing. That's nothing. And the big reason I want to make this comparison is because they even bring up that there was a high of $20. And that lasted all of a couple of hours. And this was during like the peak of the whole GameStop fiasco where Robinhood like halted trading. And man, I remember that night very well. It was after hours trading. I was real excited for AMC. I was like, dude, this shit's only like $4. It's gonna go to the moon. After hours trading, like just man, it's not shenanigans. It is what it is. Immediately opened at $16, $16.50 like that, and then like all this other stuff that I said from that article went up to 20, stabilized, blah blah blah. The way I see it, it really hasn't gone up that much. It's whatever. Oh, but the big news for that is a lot of companies right now they're having their quarterly earnings call. AMC did have one recently, and they sounded optimistic, but as optimistic as one can sound after announcing that they've lost $1 billion. But, whatever. So, another story I wanted to talk about, this was also in the news yesterday, this is from Bloomberg. There's this company called Roblox. I think that's how it's pronounced, Roblox. And if you haven't heard of them, they call themselves a tween gaming site or a tween game, whatever. I don't... I'm playing like a 30, 25-year-old game right now. I don't know what Roblox is, but they rallied pretty well. They closed, today at $69.50. The CEO, I believe, he says that the long-term impact of the pandemic has been a rise of social gaming and the rise of communicating online. So, a lot of rally. The rally we've seen all year around tech and gaming stocks really has been because of this. So no surprises here. But he does feel that this is a trend that's like here to stay. Because, like I mentioned before about the bomb prices and about value stocks and seasonal and cyclical, the expectation would be then that these gaming stocks aren't going to, be doing as well as they have been throughout the past year. And one good one to look at is there's a fund, an ETF, called Nerd that invests in gaming companies, and they did awesome over the past year, but they haven't been doing too well the past couple of days. So just take that for what you will. One interesting thing that Roblox has said, they call themselves tween-centric, whatever that's supposed to mean, but really what they're getting at is they're focusing on really getting that young audience and keeping them into adulthood and, and continuing to build a young audience. And, look at what I'm doing right now. I'll bring it up again. I'm playing a game that came out like in 1993 about a cartoon that came out in 1986. So, apparently they hooked me while I was young. And then and a big part of, why am I playing this game right now? Because they announced that they're going to make a new one. So, game developers, definitely listen to this Roblox strategy. Hook us while we're young, and we'll support you when we're adults. And like even with this Ninja Turtle one, like, do kids even like Ninja Turtles anymore? Do they think this animation style looks dated? I don't know. But man, all I know is like, I'm excited for that game. For sure. That's gonna be a cool one. Hopefully like they port it to Switch and all that too. So I guess what I wanted to end on is a news article from CNN about Elon Musk. Elon Musk made $25 billion Tuesday. Man, that's a lot of money. But basically, after Tuesday's rally, he's estimated to be worth about $176 billion again. And that just puts him barely behind Jeff Bezos, who's estimated to be of Amazon, who's estimated to be worth $180 billion. And I mean, things were really going to only be looking better for old Elon. If you go into the article, it kind of goes into a little bit of detail of kind of some of the option positions he has. So he has the potential to become even more richer as he gets granted more options in the coming future. And in addition, SpaceX, man, who isn't excited for SpaceX? I know I am. $850 million were raised, and it's estimated that it increased the company valuation to $64 billion. Whoa. So that's kind of been the news for today. Not a whole lot as far as crypto news goes. I mean, I've been really excited about crypto news lately. Not for the day. If you looked at the prices for BTC, I think there was maybe a high of 58, very, very close to the all-time high of 60-something. I'll be very surprised if we do not hit the all-time high like by Friday when Biden signs the bill. Really, if you're not already following, if you're interested in crypto at all, and if you're already not following the whale alerts, definitely do follow the whale alerts. Whoa, a lot of people moved coins to, around their wallets today. Big moves today. So, I mean, those big moves can kind of sometimes, they look kind of scary because the immediate assumption, I think, a lot of times is that they're moving their coins from a wallet to an exchange to cash out. So yeah, but crazy time for investing. Honestly, I wish I'd have been this hyped about it like this time a year ago. I'd be like having such insane gains, but can't time the market. I hope somebody has gotten some use to this. If nobody watches this, whatever. But I've really enjoyed doing this video today, kind of talking about the markets, the financial news. Posted something on Twitter about an old meme that someone had about, grown men shouldn't be playing video games, they should be day trading. No. First off,